Hi guys, today's topic is question number 4A, MTP of November 2022, CA Foundation, Partnership Accounting. In this there are some adjustments. We'll be seeing JLP and advertisement suspense account, and there is an investment fluctuation reserve. Let us go through the sum. So they have given the values on the asset side, and Samir died on 31st March. Due to that, they have made some adjustments. Land and building appreciated by 50%, and the cost of investment is to be reduced by 6%. All debtors except 20% are doubtful or good, and stock to be reduced to 94%. And goodwill to be valued at 1 year purchase, and share of profit of Samir till the date of death is to be calculated on the profit of 3 completed preceding years before death. The profit of the last 5 years is given, and the life policies are shown at the surrender value, representing 10% of sum assured. In each case, the annual premium of 1,000 payable on every year on 1st August. You are required to pass necessary journal entries in the books of accounts of the new constructed firm. Now let us see first the working note. We have to make 2 working notes minimum. One is share of goodwill, Samir's, and Samir's share of profit till the date of death. So goodwill, all of you know, they have told that average profit of past 5 years. They have given the total also. If you want, you can total it. So what is the average of 5 years of profit is 21,000. So the goodwill is equal to average profit into number of years of purchase. Here the number of years of purchase is 1. So it is 21,000. Now what is the share of Samir? They have not given throughout the question what is the PSR, profit sharing ratio. When question is silent about profit sharing ratio, it is assumed that they are sharing it equally. So you can leave an assumption also. Since question doesn't speaks about the PSR, it is assumed that the profit sharing ratio is equal. Then his share of goodwill would be 21,000 into 1 by 3, that is 7,000. I hope there is no doubt in this. In case any doubt, please leave it in the comment box. Let me clear to you. Calculation of share of profit up to the date of death. For profit, they say that take the average profit of 3 completed years. So he died on 31st March 2022, and the balance sheet given is as on 31st 12/21. So after 3 months he died. So now 2021, 2020 and 2019 we should take the profit for share of profit. So 20,000, 16 and 18,000, the total comes to 54,000. For 3 years the average is 18,000. Now this 18,000 is for the whole year, but he has to get from 1st January to 31st March till the date of his death. That is only 3 months profit should go. So 18,000 is for 12 months. We should find out what is the profit for 3 months. So I multiplied it with 3 by 12, and his share among that, this 18,000 is for all the partners. So his share is 1 by 3. So now we find out the profit. His share of profit is 1,500. So now let us look into the assets side. So there is investments 10,000. They say that the cost of the investment to be reduced by 6%. So when there is an investment fluctuation reserve on the liability side. Whenever there is an investment fluctuation reserve, this will not go through revaluation account. This will be adjusted. Any change in the value of investments, all of you know, fluctuation reserve is created because there may be a difference in the market value and the book value of the investment. So this any change is adjusted through fluctuation reserve. So this 6% reduction will be adjusted through investment fluctuation reserve. This will not go through revaluation account. Clear? Next one is advertisement suspense. What is advertisement suspense? Advertisement expenses you must have all studied in class 11. Okay, so this advertisement expenses is a deferred revenue expenditure. Why they say it as a deferred revenue expenditure? I'll explain you through an example. All of you know Saravana legend Annachi. அவர் ஒரு அட்வர்டைஸ்மெண்ட் எடுக்கிறாரு அப்படின்னா he is taking with the super model, super heroines of the industry, superstar of the industry. So he is taking so many actors and he is heroines and he is filming that advertisement. So suppose he is spending 10 crore. If in the year, in a particular year, let us say 2015, if he show the total expenditure in his profit and loss account of 2015, his profit may be wiped out by this total amount and he may show a loss in his P&L account. This is not a fair view because this 10 crore is spent not for getting the benefit of that particular year. It means that இந்த அட்வர்டைஸ்மெண்ட் பண்ணி அந்த செலவில் அவருக்கு அந்த ஒரு வருஷம் மட்டும் பெனிஃபிட் கிடைக்க போகிறது கிடையாது. he may get benefit for 3 or 5 years. அவர் அந்த அட்வர்டைஸ்மெண்ட்டை 5 years வரைக்கும் யூஸ் பண்ணி he may earn more profit. ஸோ அப்போ இந்த அட்வர்டைஸ்மெண்ட் எக்ஸ்பென்சஸை இட் இஸ் நாட் ப்ராப்பர் டு டெபிட் into P&L account, to charge to P&L account in the year in which it is incurred. So what they do, this advertisement expense is deferred to 3 or 5 years. இதை கொஞ்சம் கொஞ்சமாக ஒவ்வொரு வருஷமும் அந்த 5 இயர்ஸில் அவங்க ரைட் ஆஃப் பண்ண போகிறாங்க. டெஃபர்டு மீன்ஸ் அந்த எக்ஸ்பெண்டிச்சரை டோட்டலாக அந்த வருஷமாக அவங்க டெபிட் பண்ணாமல் அதை தள்ளி போடுறதுக்கு பேர் தான் டெஃபர்ட். ஸோ இட் இஸ் கால்ட் அஸ் டெஃபர்டு ரெவன்யூ எக்ஸ்பெண்டிச்சர். எவ்வளோ அமௌண்ட் அவங்க P&L அந்த இயர் காமிச்சிட்டாங்களோ அந்த பேலன்ஸ் அமௌண்ட் வில் பி ஷோன் இன் யுவர் balance sheet asset side. Though it is an expenditure, but it is treated as an asset. All of us know that. So in the advertisement என்ன பண்ண போகிறாங்க, further subsequent yearல they will be writing it off. It is based on estimation. They cannot tell how much benefit they are going to reap out of this exactly in the year. So it will be on estimation basis. They will be writing it off throughout 3 years or 5 years. In case of partnership, when there is an admission or now death or retirement, what happens, this advertisement expenses, they will, in case any new partner comes inside, he will not bear this expense because this is only whatever happens from the date of admission, he is responsible. So any expense before that should have already been written off. ஸோ என்ன பண்ண போகிறாங்க, இந்த அட்வர்டைஸ்மெண்ட் எக்ஸ்பென்சஸை சஸ்பென்ஸில் இருக்கிற இந்த அமௌண்ட்டை பார்ட்னர்ஸ் கேபிட்டல் அக்கௌண்ட்டை டெபிட் பண்ணி இந்த அட்வர்டைஸ்மெண்ட் சஸ்பென்ஸை க்ளோஸ் பண்ணிடுவாங்க. லைக் இப்போ நம்மக்கிட்ட ஜென்ரல் ரிசர்வ் கிடக்கு அல்லது P&L அப்ராப்ரியேஷனுடைய பணம் வந்து கிடக்கு. அவுட் ஆஃப் ப்ராஃபிட் we have saved something. What we do when somebody is getting admitted or anybody is retiring or in the case of death, when there is a change in profit sharing ratio, these all accounts are getting closed. ஜென்ரல் ரிசர்வ் இதெல்லாம் வந்து ப்ராஃபிட்டினுடைய ஒரு பகுதியை எடுத்து வச்சுருக்காங்க. ஸோ வாட் தே டூ, தே வில் டிஸ்ட்ரிபியூட் இட் டு த பார்ட்னர்ஸ் அக்கார்டிங் டு தேர் ப்ராஃபிட் ஷேரிங் ரேஷியோ. இன் த சேம் வே advertisement suspense, it is a loss, it will be borne by the partners. Clear? So now coming back to life insurance. Here the life insurance is shown at a surrender value. Any value appearing in the balance sheet on the asset side is Definitely the surrender value. Now the surrender value is, the question says it is 10%. In this case, Samir has died. So we will be getting the sum assured. So that amount is 10,000, because they say that the value of the policy is 10% or surrender value. So surrender value is 10% means 100% is 10,000. So Samir, on death of Samir, the firm will get 10,000 from the insurance company. Okay, already 1,000 is appearing on the asset side of the balance sheet. So we will be distributing the differential amount to partners, all partners in their old profit sharing ratio. This also you know that. If you are not clear about this concept, please visit my earlier videos. Okay. Now next one is provision for doubtful debts. They say that 20% is doubtful. So 20% of 20,000 is 4,000. So they have provided only 1,600. So we have to provide the difference here. Okay. So now they have asked to give the journal entries. Let us start with the journal entries. Okay. You are going to pass the journal entries. I am going one by one. First we will be going by this one. Land and building is appreciated by 50%. Okay. So whenever there is an asset is appreciated, asset account will be debited and revaluation account will get credited. Okay. So now you have to make the clearly the journal entries. Format always should be proper, and always leave some space in your journal entry so that any mistake you make, you can correct it. Okay. So now land and building account, land and building account, you have to write it in full, because there is an increase of 50%. It is shown as in the balance sheet 74,000. So the 50% of 74,000 is 37,000. Okay, to revaluation account. $37,000. Okay, you have to write always the narration. Asset value increased by 50%. Okay, or you can use the word being appreciation in value of land and building recorded. Okay. Now next one, they have said after the land and building, the question talks about investments. Investment is valued 6% less than cost. We will come later to that. So debtors, they are saying stock to be reduced by 94%. Stock is 20,000. So 6% we have to 294 means difference is to go to, only when the word buy comes you will be putting in the same amount. Otherwise any other word leaving buy, you have to take the differential amount to revaluation account. Please keep it in mind, all these things. So we will be debiting the revaluation account because here the asset value is not increased, it is getting decreased. Okay. So now here we are going to write stock account, revaluation account debit to stock account. Stock is 20,000 reduced to 94, then it is 1,200, the value comes down. And now debtors provision is increased, means liability increases, so revaluation is debited to provision for doubtful debts account. That is 4,000. So the already 1,600 is provided. So the difference is 2,400. 20% were doubtful. So 20,000 into 20% is 4,000. Already provided 1,600. So the balance amount 2,400 is credited here. So the revaluation account is debited with 3,600. Here itself there is no other thing, because investment fluctuation will not be adjusted through revaluation. So we can go to the revaluation profit or loss immediately. Here assets decreased, assets value decreased, stock by 6%. If you write by, it is 6%. And provision for doubtful debts, I am not writing because it is 20% minus this. Okay, so now we are moving on to the third one. We will be taking, because revaluation credit is more, so we will be distributing this revaluation profit among the partners. Okay, so revaluation account is debited, so that we don't forget it. We can go in line. Revaluation account debited. The difference between 37,000 and 3,600 is 33,400. 33,400. 33 plus 3, 36, 37,000. This will be distributed among the partners. It will go to their capital account in their old profit sharing ratio. Sam's capital account, Saif's capital account, and Samir's capital account. The PSR is being equal. This is distributed equally. 11,133, 11,133, and 1% we can give 1 rupee more. Okay, so this is 433. So here profit on revaluation distributed among partners. Profit on revaluation distributed among all partners in old profit sharing ratio. Among all partners in old PSR. I am writing in short, you have to write it in full. Okay, among old partners in old, all partners in old PSR. Okay, now revaluation is over. Now let us go to investment fluctuation reserve. So this investment is to be reduced by 6%. So 10,000 into 6% is 600 rupees. So we have to debit the investment fluctuation reserve to that extent. Investment fluctuation reserve account debit with 600 to investment account. Okay. So when there is a reserve, it will be adjusted through reserve account. Reduction in value of reduction in cost of investment adjusted through investment fluctuation reserve account. Okay, now the balance amount will go to the partner. So that why I make like this, because you don't forget it, that entry. Okay, so now investment fluctuation reserve will be debited with investment fluctuation reserve account debit. It was 2400 in your balance sheet. Now we are going to give them the balance of 1800 to Sam, Safe, to Samir. It will go to their capital account. Okay, so 600, 600, 600. So now the investment fluctuation reserve is distributed. Now you see the balance sheet. We have adjusted the land and building investment, and we have adjusted the investment fluctuation reserve. There is one general reserve and advertisement suspense. We will come to that. So now we will be distributing the general reserve. General reserve, you can combine this general reserve and investment fluctuation reserve, or you can make it separate. It is up to you. Okay, no hard and fast rule. Debited with 8000 rupees. Again, this will be distributed among Sam, Saif and Samir. Sam, Saif. Here you can write the fluctuation reserve distributed among all partners in old profit sharing ratio to Samir. So when you distribute this 8000, it will come as 2666, and 2 persons we can make 2667, 2667. Okay, 6018, 7800, and this. Here the general reserve, again the same narration, distributed among all partners. These are all the savings they made out of the profit. Whenever there is a profit sharing ratio, everything will be transferred to old partners in old profit sharing ratio. In case of retirement or death, all partners in old profit sharing ratio. So now we have done with this. Now there is one advertisement suspense account. This advertisement suspense account we have to debit, because how much is lying in your balance sheet? Let me see. 37,800. So now the capital account will get debited because it is a loss. Sam's capital account, Safe's capital account. It is written off immediately when somebody dies in the year itself. Okay, Samir's capital account. So debit, debit, debit. How much I saw? 37,800. Yes, 37,800 to advertisement, suspense account. 37,800. So this will PSR being equal, this will go in equal ratio, 12,600, 12,600 and 12,600, 36, 37,800. Okay. Advertisement, suspense, return off. Okay, so now this is also over. Now we will be distributing the goodwill. Okay, so now let us distribute the goodwill. Goodwill we have already calculated as per our working note number 1. It is 7,000. This will be borne by the existing continuing partners. As the PSR is equal, the gaining ratio is also equal. So no need of finding out any gaining ratio. Otherwise, whenever goodwill is to be distributed, you have to find out the gaining and sacrificing ratio. Okay, it will be borne by the gaining ratio and given to the sacrificing person. Here the ratio become equal, the gaining ratio is also equal. So we are going to debit Sam's capital account, debit, and saves capital account debit, to Sameer's capital account. Share of goodwill of Sameer borne by Sam and save. Okay, so now this is, he will be getting 7,000 rupees. As PSR is equal, this is distributed equally. He will be debited, his capital will be debited with 3,500 and saves capital will be distributed by, here you can write the working note 1. Okay, so now we are going to distribute the profit up to the date of death. As I have already told you, the balance sheet given is as on 31/12. So he died on 31st March only. 3 months we have to make the payment. So we have already find out that, and all of you know we have to operate P&L suspense account. This will appear on the asset side till it is cleared off. Okay. P&L suspense account debit 1,500 to Sameer's capital account. $1,500. Okay, so here profit up to the date of death transferred to, you can write the narration anyway, but it should explain what you have done, transferred to Sameer's capital account. Capital account. So you give here the reference of your working note number 2. Okay. So now this is also over. Now what is left out? The JLP. What you are going to get. As I have already explained, JLP is they have said that 10% is the surrender value which is appearing in the balance sheet. That is the policy you should understand taken as separate and joint and several. So in case of Samir it is 1000. So insurance company we have to debit with 10,000 rupees. On the death we will be getting the sum assured. So insurance company account, when 10% is the surrender value, the sum assured is 100% will be 10,000 rupees. Insurance company account debit 10,000. If the question says that they have received the amount, then we can debit the bank account straight away. But here it is not told, so we will be debiting the insurance company account to joint life policy account, JLP account. So we have we have made the journal for life policy amount due. Okay, so now we will be transferring this amount to what is balance. Surrender value will not be given. The benefit of surrender value is already transferred to the partner's capital account. So there is a debit balance. JLP debit is 1000 rupees. Now we got a credit of 10,000 rupees. So what is the balance? 9,000. So JLP account will be debited with 9,000 rupees. JLP account debited with 9,000 rupees, and this is distributed to all partners. This also I have already explained why it goes to all partners capital account. Sham's capital account and Saif's capital account and Samir's capital account. Life policy amount transferred to capital account. In order to save time, I am writing in short. You people have to write the narration in full. So as PSR is equal, this will go, equal amount will be distributed among the partners. So this amount also gone. Now everything is over. Almost we have completed everything. Before finishing it off, kindly go through your adjustments. See here, they have given the adjustment of land and building. We did it through revaluation account. Investment was adjusted through investment reserve, and the balance of the reserve also transferred. Advertisement suspense we have transferred. Policy amount we have transferred. Stock and debtors we have adjusted through revaluation. Okay, now coming to this side, general reserve also distributed among the partners, and we found out the goodwill, and we have also calculated the profit due up to the date of death. Now because this person has died, this cannot remain in his capital account because he is not alive. It has to be transferred to his executor account. So now we will be calculating how much amount is available in his capital account. Samir's capital account debited to Samir's executor account. This will be transferred to his executor account. Balance in Samir's account transferred to his executor account. For this, now we have to total how much is the credit available and how much is the debit available. Okay, so now let us find out how much credit is available in his account and how much is the debit available. Okay, so now first let us see his balance sheet. In the balance sheet, in the balance sheet, his capital sum is capital is 40,000. Okay, so let us take 40,000. Then we will be going through our journal entry. First credit is 11,133, and there is a credit of 600 again, and there is a credit of 2,667, and debit we will come back later. There is a credit of 7,000, and there is a credit of 1,500, and insurance credit of 3,000, and one debit of 12,600. When you net off that, you add 40,000 plus 11,133 revaluation, 1,500 profit, 7,000 goodwill, GR and this investment fluctuation reserve 3,267, and 3,000 rupees from life policy, and there is a debit of suspense account 12,600. Net comes to 56. The total comes to 65,900, and the debit 12,600. So the net is 53,300. So from his capital account, 53,300 will be transferred to his executor account. This you have to work out properly and then transfer this amount, 53,300. You can make the total here, 40,000. This is his capital, and revaluation profit is 11,133, and he is getting 1,500 as profit up to date of death, and he is getting goodwill 7,000, his share of goodwill, and life policy he is getting 3,000, and investment fluctuation reserve, and that 3,267, general reserve. I think that's it. So the total we will make it here 40,000. Let me total it because we have to check. 40,000 plus 11,133 plus 1,500 plus 7,000 plus 3,000 plus 3,267. This comes to 65,900. There is an advertisement suspense account debit of 12,600. So the balance comes to 53,300, which is transferred to the executor account. This also you can make the working note number 3 if you want. So we can add it here as working number 3, or simply you can transfer this amount. Okay, that's all in this video. Any clarification, please leave it in the comment box, and subscription is absolutely free. So please, I see many people are still watching without subscribing. Please subscribe. Thank you for watching.